Hello, everyone. This is Dylan Lange, branch manager and senior loan officer at Evergreen Home Loans here locally in Bellingham. And I hope everyone had a great October. Hope everyone had a great Halloween with families, kids, all that good stuff. My favorite holiday is coming up, Thanksgiving. The best food. You get to hang out with your family. You get some time off work, and there's no presents. There's not this angst of buying presents, the perfect present. You don't have to open up presents in front of everyone. So I'm just really, really excited for Thanksgiving time. And we're actually going to Florida to visit my mom's side. They get to meet Cruz for the first time. So just really, really excited. But let's do an October market recap. Obviously, a lot of stuff going on. The Fed rate cut, which was September 18th. Last month, we talked a lot about the implications of that. We just had a presidential election conclude. Once again, this will not be a politically charged newsletter or video. It's just simply, what does this do to our real estate market, our economy? What kind of patterns are we seeing so that you as a consumer can make educated decisions on if to buy or sell real estate right now? Okay. Remember, WhatcomHomeLoans.com is my website here. Updated a little family photo. We just got an updated set here that we did for kind of the holidays, since Cruz is just changing every month. And I also have to show my NMLS number for compliance. So there you go. All the previous videos are here, loan products, testimonials, applications where you can, see a refinance or a purchase rate, all of that good stuff. But anyway, let's jump right into it. We've got a great one this month. And so our nugget of the month for October is just in what I'm seeing in this market right now is that listings are sitting longer than expected. It's a volatile market. Once again, we've got what happened with the Fed. We've got the presidential election that concluded. I'm just seeing a lot more buyers sitting on the sidelines. I'm seeing listings sit. So this is potentially a positive for buyers that are looking to buy real estate right now. When you have less competition, you could potentially get a better deal. For sellers, this is maybe not the best thing in the world. If you guys remember my newsletter, it was 2 or 3 months ago, I said, hey, this is going to be a great season to buy. If you're a seller, if you can wait till spring, do it for a lot of these reasons. We've seen mortgage rates go up since the Fed cut the rates about 1% in a 1.5 month span. What does that do? It makes home affordability a lot tougher. That puts a lot of buyers on the sidelines. That means that listings are sitting longer. That means that you could potentially get a better deal in seller credits, so that you can do a temporary buy down, a permanent rate buy down, make that monthly payment a little bit more digestible. We've got an awesome program. So it's our Evergreen Partnership Channels, and there's 3 different pieces to this. And I'm just going to talk about the home seller advantage, but we've got an Affinity program where we can use this for, if you own a business, if you know an HR director, if you know someone that owns a business, we can actually set up the same program for the employees of that business. And then we've also got the preferred builder program. So if you're a builder, developer, you're listing multiple homes, we can do this program as well. But I'm going to talk about the home seller advantage. And just overarching how this works is we offer 0.75% of the buyer's loan amount in a lender credit. So the easiest way to show you, let's just show it visually. Let's say I was looking at my average loan size year to date. It's about $500,000. So let's look at 500,000 times 0.0075. That would be a $3,750 credit towards the buyer. They can use that for their closing costs. They can use it to permanently buy down their interest rate. They can use it for a 1.0 temporary buy down, which means you get a 1% lower rate for a year. Hopefully rates will settle out and then you can refinance. So there's a lot of different ways to use this. With the home seller advantage, what this is we partner with real estate agents and the sellers on their listings, and we can offer this credit. And then also, if the seller wants to contribute, we can package this, we market it, and we show the buyers why this listing is more beneficial for them to buy rather than the listing down the road because of what it does to their monthly payment and what it saves them. So if you're a seller watching this, if you're a consumer and maybe you're a buyer, maybe you're a real estate agent, you've got a listing that's been sitting too long, or you've got a listing that's coming up, it's contingent, you need to sell it quickly. This is really the program for you. So let me show you what this looks like and the marketing materials. So this is one that I did it on. And let me show kind of what mortgage rates are doing and why this is important. So let's look at the last year with mortgage rates. This is the average 30-year fixed rate, Freddie Mac, right? A lot of these are the published rates from lenders, so it's with a 1% buy down, 1 point buy down. So you can see here, we had a low really right. I mean, this is when the Fed cut the rate, was September 18th. So a day after, that's really your low there. Average 30-year fix was 6.09%. Look at it now as of today, November 7th. We're up upper sixes right now with a 1 point buy down. So you've seen almost a 1% increase over the last month and a half. Okay. Look at mortgage applications as well. This is, once again, this is when the Fed cut the rates. Everyone was really bullish. Oh, the Fed's going to cut the rates. Mortgage rates are going to plummet. We talked about this in previous videos on why that oftentimes doesn't happen. Look at mortgage applications. This is nationally, week by week, negative 17%, negative 6.7%, negative 10.8%. So if you have a listing that's sitting, that's why. There's not a lot of mortgage applications coming in the door. There's not a lot of buyers out there looking to buy real estate. It's just slow. If you're sitting on a listing, this is why I think that this is a great program to utilize. So let's look at this. So, if the average mortgage is high sixes, on this one, this seller was contributing $16,000. We were contributing our 0.75%. So we were able to offer any buyer a 5.99% interest rate. Okay. So and this is our marketing team. Our marketing team is incredible. The flyers are incredible. So if you're a seller or a realtor, you don't have to really do anything. We do all the marketing. And then look at this comparison tool that we will set up. So if a buyer came in and did 25% down, this house was listed at $964. They did 25% down on traditional financing. If they did not have this program, they're getting a 6.875% interest rate, and their principal and interest payment is $47.49 per month. Now, with the $16,000 seller credit and our lender credit, the buyer coming into this listing could get a 5.99, which is $43.30 a month. They're saving $419.50 a month for 30 years. That's an annual savings of $5,000. Okay, let's see what is that over 30 years. Not that anyone keeps their loan or their house for 30 years, but that's annual savings times 30 years. $151,000 savings. The seller contributes, the lender contributes, the buyer does not contribute, right? They just get a better deal. Now, some people might be asking, well, Dylan, we usually just do a price drop. It's more impactful. Here's why it's not as impactful to do a price drop. So let's look here. Remember this number at a traditional mortgage here. So $47.49 would be their payment if they didn't have this program that we're offering. Okay, $47.49. Let's say that the seller says, hey, we just want to drop the price $16,000 because that's what they contributed. So now this loan amount would be $16,000 lower. Their monthly payment is now $46.44. So let's go back here. So instead of $47.49, let's get our handy calculator out. I'm not smart enough to do this on the fly. So we do that. And then let's go back here. So $47.49 minus $46.44. Minus $46.44. That buyer is saving $105. That is why price drops are not as impactful as doing a seller credit, lender credit package. They're saving about $300, $350 more by offering a seller credit. That is impactful numbers right there, right? So that's why we do that. The buyers can also choose, instead of doing a permanent buy down, they can take the 6.875 and they can do a temporary buy down. They could do a 3-2-1, a 2-1, or a 1-0. The credit now, it wouldn't be enough to do a 3-2-1 buy down, but they could do a 2-1 buy down, which is $16,754. For the first year, they would save $923 a month. For the second year, they'd save $472 a month. And then after that, it would go back up to the normal 6.875. So there's a few different options, but those are just, I wanted to show visually the impact of actually doing this seller credit as opposed to just a price drop, right? This makes a big difference. That is the main deterrent right now for buyers, is when those interest rates go up, they go to their loan officer and they look at what that monthly payment's going to be on that house, and they just walk away. They don't even offer. And what I'm hearing from real estate agents is, the showings are down a little bit, but these homes are getting traction. There's just not offers coming in. And I think that's because those buyers are going back to their loan officers and seeing what these monthly payments are. and they're walking away. They just can't do it. The process, very, very simple. We sign a contract, Evergreen and the seller. The seller says what they're going to contribute. We say what we're going to contribute. Seller doesn't need to contribute anything if they don't want. Obviously, it's more impactful to the buyer if they do. Then I deploy our marketing team. We get all the flyers set up that I just showed you. Listing description, agent remarks get updated so that buyers looking on MLS or looking on Zillow, Redfin know what's being offered and why that's impactful. They can upload the flyers. We can put the flyers in the house. Then hopefully the buyers come in droves, right? They come in masses and they see the difference between your house and the house down the road. And then you go and buy your new home or go retire or do whatever you need to do. So hopefully that was a helpful explanation. I would also say, I forgot to mention kind of in the market what we got going on. The Fed is supposed to meet tomorrow, or they're meeting today yesterday and today. And the expectation, let's see, so Thursday, so the Fed meeting the expectation is they're going to cut rates by 0.25%. We'll see what happens there. A lot of volatility in the market. So before I show you kind of what rates are doing and all that, just know we are in a very, very volatile market. Things could go up, down, sideways. Here's the bond market right now. If you're kind of a bond nerd like me, when bond yields go down, mortgage rates go up. This is during COVID. So we have a long way to go. Probably never going to see those 2.5% interest rates. You can even just see in, the last year or so, mortgage rates were going up. They've kind of fallen, mortgage rates were going down. And then now mortgage rates have gone up because bond yields are going down. It's kind of an inverse correlation there. Let's jump back into this. These are kind of rates just on a 700K purchase, 10% down, all of that. So you're seeing high sixes really for a 1% buy down right now. And the mortgage rate trend, as you saw, is going up. The mortgage application trend is going down. Once again, if you're a buyer, this is potentially positive for you. If you're a seller, this is potentially negative for you. We do have our step up program. If you need to sell and buy, you can actually buy before you sell. You have 4 months to sell. So that may be perfect with kind of the timing we're talking about with the seasonality. Those are turn times. Once again, I always say I recommend getting through underwriting. It's free. Get a soft pull on your credit. Use our Security Plus. That's all I've got for you guys. I'll see you next month.